Hello everyone, Paul here from the Pin Academy. So in today's video, we're going to be looking at how we can trade continuations. And I'm going to be using an example of one of the previous videos. I think the immediate previous video about the USD pairs and also the USD DX itself, DXY, sorry, itself. So the previous video spoke about how you can correlate the DXY to use its strength and determine the strength of other USD related currency pairs like Euro USD, USD JPY, and the rest, right? So in case you followed that video and I did some breakdowns, or you've been following our social media handles, there are some breakdowns we did. So I'm just going to be using the same examples, right? Now, I'm going to start with the DXY itself. We look at the continuation, right? If you were following it. So let me just go to the DXY here. So this was the setup we did last time. We're expecting a breakout here, or if it was to break down here to be coming back, but instead it broke upwards, right? So now, what do I mean by continuations? By continuations, I mean like the market was moving in a certain direction. For example, it was moving high, low, high, low. So it has broken above. By continuation, I mean that we're expecting it to continue the same direction. But now, so far it has made, they say, this high here. There's some untested level here. So there's a possibility of a two-way movement. There's a possibility of it coming back down to retest here so that it can continue. That's a continuation. So most people think that a continuation just it will continue without retesting. No, the market doesn't move in a straight line. So we have to make some retracements. We move like in a wave, right? So when you look at this DXY chart, what has it created? Yeah, it has created some kind of a shoulder, head, and shoulder. So what are the rules of, plus this is the neckline. The previous low here, lower low, lower high, lower low, lower high. This previous lower low here was a neckline here. It was a lower high here, also became an equal high here. The market reacted a bit, and then finally we have broken. So when the market creates a shoulder, a head, and a shoulder like this by breaking this neckline, what do we expect? We expect the market to come and retest here before either breaking downwards or to continue. But we are hoping to continue because we have some level that is not testing, is not tested upwards. But still, we shall say we don't have to guess what the market is supposed to show us, right? So when the market taps into this area, already we are seeing the market has tapped into these levels here, which also we had a small neckline here, but I'm expecting a small push before maybe giving us a small retracement. Now, as the DXY is retracing, meaning it is a bit weak, we shall also be seeing the dollar-related pairs like EU, Euro USD, GU, GBP USD also retracing, right? Because right now, all these ones are dropping down if you have to check them, right? Let me just show you practically. Trading is a bit practical. Not a bit, but practical. So if you look at GU, GBP USD, you can see they were dropping, right? Also, if you look at Euro USD was also here dropping. I traded these ones. I didn't trade AU. It's one of the breakdowns I made, but I didn't trade it. But also, if you go to AUD USD, you can also see it was dropping. It's one of the setups that we shared. You clearly see it broke below this level here. And then this was the target for us we had. So it hit the target. Right now, it's below the target. So as the DXY will be retracing to go down, also we shall expect those other ones to be going a little bit up. So that's how you need to understand the strength of a certain currency. All these ones are dollar related, so that's why we're using the DXY. So if you look at the DXY, there's a head and shoulder, inverse head and shoulder. So we shall expect a retracement to come and retest these levels that it has taken out, right? It can retest either here or even this level here, or even it can make a deep correction up to this area here. So in that process, we shall expect also, I'm going to use an example of GBP USD to be going back upward. So let's look at it here. We clearly observe that, let me go just to the daily time frame. We clearly observe that the market here was making an uptrend, high, low, higher, low, higher, low, higher, low. Did take out this, then it made a higher high, made an inside breakout. This level here is still intact. Higher high again broke down, higher high, then retested this level here, but failed to continue higher, made the colors, and this was a low compared to this high that the market had made. So when the market broke this point here, when the market failed to take out this, our end was around here, but also the market has broken below this point now after retesting. So there's a possibility the market may want to start a downtrend, but how do we make sure of that? We need to see the momentum with which the market is going to retest this red slab here, right? I hope you guys have understood that. Let me just repeat that. This was the last high the market created. It created the high, higher low, high, higher low. So here the market was playing around, created this kind of like a shoulder, created a new high, like which will act like a head if this neckline is taken out. then came and retested this red slab. Are you seeing this red slab? That's why I made it red. Then failed to make a new high, to go beyond this high here. Then it broke below. So now in the process of breaking below here, and it had already tested, it makes this like a neckline, or to act like the last higher low that we had, because the retested, so we expected a higher high, but which didn't make. So now we shall expect a retracement here, and then we continue down. That's why we're saying that we want to trade that continuation again. So I usually advise, if you're just a new trader or you're a trader who is not yet consistent, kindly always trade continuations. Do not trade this retracement up. Now, there are people who may be already in a buy to go upwards, but I really don't recommend you trading like that. Wait for the market to come and retest this level and observe the momentum, right? For example, personally, I've traded for a number of years, but you can see I used the momentum here that retested here. The momentum was very weak, so I utilized this. You can see after the close here, I took my entry to target that level. Now, also on the retracement, I want to see a weak momentum while approaching here before I can trade the continuation downwards. I'll be targeting again this if the momentum is weak, because I'm a momentum trader. I love trading momentum. I use strength of momentum. If it is very strong or very weak, I utilize that to take my trades, also to make a lot of the decisions. I've spoken a lot about it. I hope now it makes sense, right? So GBP USD, I'm expecting it to come and give us this retracement here before we can continue. If it's very strong and it breaks again above here, we shall be waiting for the retracement above. What is very key is just momentum. We can also look at Euro USD. When you come and look at Euro USD here, I'm also expecting, when you go to the daily time frame, let me just go over here. When you go to the daily time frame, you can see also here the same case, almost because they are related to the dollar. There's a correlation there. So you can see the market was making a high, higher low, high, higher low. And I spoke about this in how to mark key areas, which level is very significant. We have a whole video on that, significant levels and insignificant ones. So here the significant level was this one that gave us a push to come and retest here. So higher high, higher low, higher high, higher low. The market came and reacted a bit, so not so significant, and broke above. This is a new high. So the market, instead of coming to retest here, this was an uptrend. You can see high, low, high, low, high. So instead of coming to retest here to continue, the market did what? It aggressively broke down and retested in a weak way. And in the process of retesting, people know about patterns. I promised to make a video on this channel of ours here about patterns, and I will deliver on that promise. You can see there was a pattern here to show that there's a weak momentum. And this was a very nice entry here. Once the market came and gave us this here, a weak momentum also in our entry time frame, then we took a trade here. But you can see this is like a neckline point. That's why our target was just slightly below. We knew the market was going to pick some liquidity here and people's stop losses. So that's why our target was here. So now the market has done that, but we expect still the market to give us some retracement into the levels that have been broken here. You can see we have a turning point here, we have a turning point here, we have a structure here, turning point here. So there's a possibility of a market coming back inside here before you can continue, right? Now for you, the case of Euro USD, also I'm not a very big fan of trend line, but it can act as a very good aspect of confluence. We have this touch here, we have this touch here. So you have to be careful when the market retraces here and it drops down. You have to make sure that you're watching this for a third touch, because it can push it higher, right? So make sure you watch it as you're marking your target or as you're expecting the market to continue lower, because the market can easily be pushed higher with this. Also observe how it approaches it. If the momentum is weak, then it may push it, because it will be moving hand in hand with the DXY. If the DXY is weakening, and then we may be seeing it making a third touch and then pushing high, right? We shall be updating all that. But I just wanted to show you how exactly you should be trading continuations, especially if you've not mastered your rules or you've just started getting to some level of consistency. Make sure at least you don't trade reverse retracements. For example, here, this will, when the market is to come, it will just be like a retracement. Do not trade retracements. Wait for the market to make that weak retracement. It can make it in form of a pattern. For example, this one was a pattern here, which I was speaking about in the day time frame. So when it broke out, you can see the momentum here, right? So when it broke out, that's why we took our trade. First one, I took it from here, went into be some bit of drawdown, and then it dropped, right? So do not trade that. Wait for the market. For example, here, if you want to trade the retracement here, you may be faced by a lot of resistance levels, which is very dangerous, right? So as a trader, make sure you trade. I usually advise continuations, right? Personally, I've traded for some time, but still, I love trading continuations because they're very easy. it's very hard to start guessing or predicting where the market is going to turn from and to go and retest somewhere. But a continuation is easier to mark your turning points, to observe a retracement, right? For example, this is a low, lower high. So if the market comes here, we know that if the market is to come back here, there's a possibility of us making at least a small movement, even if it's to make a higher low or double bottoms. It's easier to determine than knowing when the market is going to turn from here. It's possible. It's easy, actually, it will be easier if you've traded for some time. It's easier for you to use this leg to tell this retracement here. But if you're just beginning or your rules are not yet you're not very comfortable with your rules, I advise continuations. Continuations are very easier to trade, right? So those who trade USD pairs, this was just like a follow-up video on what we spoke about. Even gold, the same happened to also all these points here. Gold, we spoke about this level being touched into. Let me just... the last time we spoke about gold, wanted this level to be touched, but it wasn't touched, right? The level wasn't touched, and then it just went up and hit. Actually, it even hit our target. This was the target that we're targeting, but it didn't touch our level, missed it, was here, then just went up and hit the target. So here it means there's no trade. So I'm still interested in this level here. It's still a virgin area. Why? Because it was a resistance here, became support, also became resistance. And you can see it's a very key area. So at least I'm expecting the market to come and react here, and then we see. I'll also be interested in how it approaches it. If it's very strong, I'll not be interested in it. But if it's very weak, creating some way of showing me that there's some weakness in approaching this support level of mine, then I'll be interested in seeing how to trade it upwards. But for now, I just want to show how it approaches here. So I usually advise, let's trade continuations. Or if the market bounces off from here and goes up here, I also have a level here. I'll be seeing how the market approaches it, because this time, this price here is in the middle. Do not trade price that is in the middle, right? So that is it for those who trade the USD pairs. I've just given a few examples, but use it in that aspect, right? To trade continuations. It's better to trade continuations, right? So once again, DXY has just created inverse head and shoulders. If it is to give us, actually it has attempted to touch there. If it gives this retracement, we shall be seeing a lot of retracements in these pairs that are related with it, right? If it breaks up aggressively still, we know what we use there. If it breaks above here aggressively, you know what we use. The tool we use is Fibonacci. Still, we shall be updating on that, but we really love you to be independent, right? So that is it for this video. Have a great day.